Oh boy, here we go. Back to work tonight, guys. Now, first of all, great job today. It sounds like a lot of you guys made some great money today using that game plan from last night's video. So well done on that. Now, tariffs are out. In case you weren't aware of that already, tariffs came out a couple hours ago. And now we have this big move down. Now, big moves. Big moves are big clues for me because they tell us there are two types of strategies, two types of setups we look for anytime we see a big move like this. Now, the first one, very common, very easy, very likely for tomorrow. We're going to cover that tonight. But trade number two, if we're lucky, if the trading gods are watching down tonight, we're going to get trade scenario number two for tomorrow. And I'll tell you, those are my favorites. They can make us a ton of money tomorrow. So two types of strategies on my radar for tomorrow. We're going to cover entries. We're going to cover exits. We'll cover some variations. I want to make sure everyone has a game plan to make some money tomorrow as well. So charts look fantastic tonight. One of the most important videos of the week. Enough of the intro. Let's go dive in and go make some more moolah on what should be a fantastic day tomorrow. The S&P and SPY is all ready tonight. NASDAQ triple Qs are all ready. I have four very simple but very important clues on these charts right now that are telling us where I think the winning trades are waiting for tomorrow. Two of those four clues are right here on this hourly chart in front of us. We had a big move down to finish up the month of March on the S&P and the NASDAQ. Anytime we see a big move, remember this, anytime we see a big move in one direction, we expect a two-legged pullback, a retest of that low, and as everybody who sold up here takes profit down here, a bounce off of that low. Anytime we see a big move, it's a two-legged pullback. Bears get short selling high. They take their profit at that low and a bounce off that low. One of four big clues for tomorrow. And what might be one of the most important clues tonight is a big move and a retest. We've been talking about that stuff all week this week. The second clue, though, is another very important one. That range we saw earlier on in the week. Now, why? Why would that range be important? Well, because ranges, they love to rotate. The amount above, the amount below, the amount above, right? The amount below. As you can see here right now, we have just completed a massive range rotation. So unless things accelerate, unless things get into a tit-for-tat trade war in the next 24 hours, what should be happening right now is we should be trying to rotate back up into that trading range. Now, that does not mean being a buyer is going to be easy, right? I'm not going to sugarcoat this. The bears have all momentum right now and a lot of fear of the unknown right now. We'll talk about, though, how if we're lucky tomorrow, again, two types of trades for tomorrow. But again, my mindset right now is getting that rotation back higher. Let's keep going though, because there's more to cover here tonight on the video. Third clue for tomorrow is kind of the baby clue for tomorrow. It's the least important. We got news tomorrow at 10 o'clock Eastern time. It's not trade. It's not jobs. It's the ISM services number. We know the services sector has been a big sticking point for inflation. That'll be coming out tomorrow at 10 o'clock Eastern time. So you best be ready for that volatility around 10 o'clock Eastern time. We always call it the 10 o'clock shock in our trade room. That's our third clue for tomorrow. Fourth clue, and a very important one, is down on some tick charts. You know, I like to use these hourly time frames for the big picture. They give us a lot of really good insights into the bigger picture stuff. But let's go to the tick charts right now. Tick charts make entry timing easier. All the time frames, by the way. Upper left-hand corner, that is a 7,000 tick chart. And in case you're watching for the first time right now, that is the 21 EMA. It's the only indicator we use to find winning trades each week. There's one really, really big, and you can say big is the key word here, big clue on this one. It's a big move down. Now, didn't we just talk about this? We did. Anytime we see a big move down, what do we expect? A two-legged pullback, a retest of that low, and then what? A bounce, right? Because anybody who sells high, they're taking their profit where? Yeah, they're going to buy out of that position off of that low. So I mentioned earlier, there are two types of strategies that we look for after a big move. This will be one of them. And if we play our cards right, we can buy it during the bounce. We can sell it on the way back down. And you know me, right? I love me some double bottom retest trades one of my favorite trades for tomorrow is that retest trade on the retest. So let's cover the first of two scenarios. And I'll tell you right now, again, if we're lucky, we'll get the second one tomorrow, maybe both of them tomorrow if we're really lucky. So if you like making money, definitely make sure you watch all the way to the end here. Now, how do we buy that bounce? Well, again, don't underestimate the potential of these bears right now. I need, with all of this bear momentum, I'm going to need to use a very specific type of pattern to trap in some bears and use their stops to squeeze this sucker higher. So as we start pulling back, I want to see bears try once. I want to see a higher high. Bears try twice. Now, be very specific with this. It's got to get below a low right here. There's a very specific pattern. We call these crown reversal patterns, all right? Crown reversals. Again, it's a bear trap. One try, two try. I want to get underneath that low. I'll be in underneath that low. I do not want to be buying this as it goes higher, okay? Write that down. Do not buy this as it goes higher. Why? Because as we now pull back up now, two-legged pullback. Think about a measured move. These usually go 138.2, 150%, right? A bit more than a measured move. Okay. So we pull back now. Now, as we pull back, now we're up into areas of resistance. Now we're up off this low. We're expecting a retest now, right? All momentum wants to retest. How do we time the entry on that one? It's a bull trap. It's buyers once. It's buyers twice. Now I can be more aggressive on this entry because we're going with momentum. It's a bull trap running back down to retest that low. Now remember, anybody who sells up here, where's their profit targets? Their profit targets are now waiting down here. Now, this is the third pattern in this sequence. Again, this is the first of two sequences we're watching for tomorrow. When I go back to retest that low, I can almost guarantee you inexperienced traders who didn't have the guts to short that bounce going higher, they're going to chase this thing running lower. This is a horrible spot to be selling after a huge move down. Remember, after a big move down, it's way too low to be shorting this thing down here. So what I'll do is trap those bears in. Now, I don't need a crown reversal on this double bottom retest. What I want though is a bear trap. Now pay attention. It's one try. It's higher high. It's two tries. Once I get bears trapped in, now I can use their stops to fuel this move going higher. Now, this retest has potential to be a massive squeeze. These love to retest and then run right back up into that range we saw earlier on the hourly time frame. So very important. If this thing begins to squeeze off that low, I'm going to start adding to this winning position. And to do that, I'm looking for a very simple pattern. I'm looking for a shallow pullback, a higher high in price. It's so important that we see some separation away from that moving average. We're not going to get much separation most likely on that pullback because again, bears will come in and whack that sucker back down again. But if I start seeing that separation right there, then I can go out, mark that low, and I can add to that winner by getting in right below that low. So again, two scenarios for tomorrow, right? We're expecting that two-legged pullback, retest, and a bounce. Crown reversal. It's a bull trap. It's a bear trap. It's a retest trade. We love those in our trade room. And it's an add-on to get that squeeze going higher. Now, I want to cover that second scenario on the NASDAQ. Before I do that though, how would I know when this turns into reversal? Because would anybody be surprised if this goes up, down, and right back up again? Of course not. It's been a wild last couple days here. But question though, how do I know during that pullback, how do I know when to sell it or when to flip it and start buying it? I'm going to cover that answer in just 2 seconds. Before I do that though, let's slow down for a second because I know most of you guys watching right now, you know these patterns already. You're making money with these already. I get so many great emails, you guys making bank today. So I know most folks watching this, you guys know these already. But if you're here for the first time right now, this could be a brand new strategy. Don't you worry though. I teach this entire system, all the entries, all the exits in my free trading class. In fact, I have a ton of trade examples of crown reversals, traps, add-on trades. Guys, I want to help you time better entries with stuff. What I'll do is I'll put a link up top here for you. Upper right-hand corner, hit that little link that popped up there. Take that free trading course because the strategy I teach in that video course will teach you a stupidly simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free trading course because everyone loves the trade examples I include in that short video series. The best part is it is all 100% free for you, all linked up there for you, upper right-hand corner. Oh, also too, guys, I'll put all the important links you'll need down below the video tonight. Definitely start first with the free video course. Most folks start making money all on their own with that free video series. So start there first. Enjoy that video class. And don't forget too, I post a ton of charts and videos and mindset stuff throughout the day on Twitter or X, they call it these days. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn the roadmap, hopefully make a lot more money because of it. I'm gonna put those all below the video tonight down in the description of this video. All right, so where did we leave off? Now the new folks know where to go for more information. I mentioned earlier that in these scenarios, it's a crown reversal, it's a pop-up, a bull trap, and a run back down for that double bottom retest. We love those retest trades in our trade room. But here's the $1,000 question. During that pullback, is there anything that would tip me off, that would tell me not to sell it and to be a buyer now? Oh, absolutely it is. It's the moving average. This is why we love the 21 EMA. So imagine now, as we go higher, the sell scenario is we pull back once, twice, lower low. Always, always, please, lower low. Buyers want to buy low, right? Sellers want to sell high. Bear traps have higher highs. Bull traps have lower lows, right? Buyers once, buyers. Okay. So that's the trick to the bull trap. But I'll tell you right now though, if we get a shallow pullback and we start separating off of this moving average, if we separate off that 21 EMA, remember this, separation equals strength. If we pop up and that pullback now starts to separate, now those shallow pullbacks aren't pulling back anymore now, and we start grinding higher, don't forget about that big range on the hourly chart. Now, how do you trade it? Very, very easy. Find a trend line. Off the high, bring that trend line down around that low. Are you seeing this now? Now, very important. Look left. Find one of these prior swings that lines up right around the low of that channel. And there are lots of ways in which I can time the entry on this. I teach the entries in more detail in that free trading class I mentioned earlier, but this could be a bear trap below a prior swing. It could be a 2-try bear trap. One of my favorites is we pull back to the moving average. The bears try a couple times. We now have all of that momentum. Remember, separation equals strength. We can squeeze those stops and run back up, likely now at this point, up to retest those highs. One thing I love about these patterns too is the pop leg, okay? That pop leg is a measuring leg, okay? Screenshot this and put this in your journal. That pop leg, not the entire grind, okay? Don't include the grind. The pop-up leg, that's a measuring leg. Once I know how deep that pullback is right there, then I can combine that right there. Remember, guys, one of the easiest ways, well, maybe not that easy, but the most effective way to make more money is to hold your winners longer. And it's easier to know how to do that when you use techniques like this, okay? So that will give us now that final exit as we go higher. Okay, so that's how we know when a pullback can be sold back down again, or when that pullback begins to grind and that separation, yeah, now you know, okay, that now is that pop and grind, we call it, and I want that first test is the best test off of that low. All right, I'm getting excited just talking about this stuff right now with you guys here on the video. Now, why don't we grab the NASDAQ now? Let's talk about that second scenario for tomorrow. It's not as common, but again, if we're lucky, we'll get maybe both of these for tomorrow if we're really lucky. We'll talk about that here in a moment here. Now, before I dive into the NASDAQ though, if you're enjoying this video tonight, please help me grow this channel, will ya? By hitting that like button and make sure you subscribe. I know we're all busy people. I get it. There are lots of things you can be doing right now. I appreciate you tuning in and watching my stuff here every evening. So thank you so much for the likes, subscribes, all the ongoing support. Now, I promise I'm done begging for engagement here. Let's now dive in and talk about the NASDAQ here. And I appreciate you guys with all the likes and the shares here. Remember, that big move down, two-legged pullback, retest of that low, profit-taking bounce back up. That trading range is just begging for a rotation. Now, as you can see here on the NASDAQ, there could be a little bit more room to go there. So don't be surprised here if they start talking trash, right, about the reciprocal tariffs. You know that's coming, right? You know the countries being affected most about this. You know tomorrow Europe's talking trash about stuff, so we may keep going a bit lower here. Don't be surprised though if we keep on kind of moving lower here a little bit more overnight. Let's now go to those tick charts right now. And on the tick charts right now, the size of that move, right? Okay, so on the S&P, we talked about how in these situations, it's a two-legged pullback, a retest of that low, and all the same stuff that we talked about earlier on the S&P can be applied here pretty much directly right now to the NASDAQ. Let's now talk about though, let's cover now that second game plan I mentioned earlier, and that is definitely going to be a trading range. It is very, very common after a big move like this, especially with all the fear of the unknown right now. We may not be able to get that. We may not get that full two-leg retest and back up again, or we may get something like that that ends up turning into a range down here. Now, ranges. You know, I hope if there's one thing you learn from me, I hope it's how ranges work. Because personally, once I got good at ranges, trading became so much easier for me personally. So ranges. The most important thing you want to think about when it comes to ranges is rotation. They love to rotate back and forth using symmetry. And we use things like, again, symmetry, right? The amount above, the amount below. We also use things like expanding triangles or megaphones. You'll learn those more advanced tactics in that free trading course I mentioned earlier, which, by the way, grab that link down there below this video. So ranges give us ways to make money on both sides of this market. So, for example, if we start chopping around, going sideways here for tomorrow, we are still looking for that run up and that move back down again, right? And it's very similar to what we mentioned earlier. I want to get this price popping up. I want to get those buyers coming in and chasing after it, that one, that two. Now, this is why I said earlier, these can be a lot more lucrative because in a range market, the market simply doesn't want to go back and retest the low now. Where's it trying to go now? Yeah, see, now this is why these are my favorite. Because now the amount above, now the amount below. Yeah, see, now you see what I'm talking about. Now as we go lower, now the target's all the way back at that low. Now remember, when you get a nice winning trade above a range like this, don't just kick your feet back and relax, right? Keep your foot on the gas pedal and add to that winner. Now, how do you add to winners? The trick is you look for that separation off the moving average. Again, there's this very common theme, right? Whenever markets separate away from that 21 EMA, separation equals strength. And remember, it has nothing to do with the speed of that move. The speed of the market. You know, people often think that a fast market is a strong market. I would say, sure, that happens a lot, but a lot of times that separation is misleadingly slow, right? It'll make you, it's a bit misleading because it'd be slow like that. But I'll tell you right now, separation equals strength. Lower low, right about that high, right? That's your add-on, right? It's a bull trap and an add-on. A lot of examples of those in the free trading course. Now, again, we know where the market wants to go now, right? We know where the market now wants to go. Now, once we take out these level support down here, remember, ranges want to rotate. They want to rotate where? Back up into that range, back above. So now we take our profit on the pendulum swings. We trap those bears in a couple times. We squeeze those stops because, well, for me personally, my favorite way to trade is to run stops. I like bull traps above the 21. I like bear traps below the 21. And again, when we start getting that rotation back higher, what do? We add to our winner with that separation going higher. So very, very important now, right? Very important to keep that in mind, right? Keep that sequence in mind. Bull trap, add on. Bear trap, add on. Think about triangles back and forth like this for entries and for exits. Okay, now, should we kick this up one more notch? Want to dial this up one more notch? Okay, let's go one more notch, a bit more advanced here now. This is my favorite version of a range. So we have a big move down right now. And oftentimes what happens after a big move down like this is we don't go higher. Going higher is the easy one. Oh, and before I go forward here, if we go higher here and we start seeing that separation, right? That is the same thing we mentioned earlier, right? If I separate, now I'll talk about that more in a moment, all right? I'll cover that more in a moment. First things first though is we may not go higher. We may go lower first. If we go lower first, now we have all of that bear momentum. This is where things get exciting. If you're a student of mine, the trade room, we call these slingshots, right? Slingshot reversals. What happens is in a range market, if I go below that low, it's already a very big move going lower. This is not a great spot to be selling. Unless something really dramatic happens next 12 hours here, there's a good chance that's a bear trap. So if I can get those bears trying once, bears trying twice right now, now I can squeeze those stops. Now, what's the difference here? The difference now is now as we rotate going higher, for whatever reason, these ones that go lower first after a big move down, they love to squeeze. They love to add on above that high, right above the moving average, and they love to just simply punch and run higher. Now, I will take some profit off at that pendulum swing, but be prepared for a situation like this. Be prepared for that now to begin to grind and grind and grind. Again, we call these slingshot reversals because they shoot lower, they bear trap low, we squeeze those stops, and again, because we're so far, and oversold may not be the best word for it, but because we're so low on the chart right now, it oftentimes just whoop and just rips and runs higher and slingshots and squeezes, and again, separates away from that moving average. Now, there's two ways I can trade this now, this reversal now. We know separation now tells us the buyers probably now have control now and want to go back up into that range up overhead. The key to this is though, is you want to try to find an entry off the top of that range, a breakout pullback. Okay, that's always kind of the best entry is a breakout pullback off the top of that trading range. Oftentimes though, we don't get that. Oftentimes all we get is we draw a trend line off the highs, we bring that trend line down around those lows, and oftentimes all we get is that first test is the best test off of that channel. And again, this could be a bear trap, it could be a two try off the moving average, right? Of course, I can't go over everything right now in the video, right? But again, take that free trading course and you'll learn this stuff in a lot more detail. So one of my favorite variations of this is kind of that slingshot reversal. We overdo it, right? We overdo it. We slingshot higher. All of that momentum as it rotates off that low. We're already at the low of that big 60-minute time frame, that range, and it punches up and grinds. Right? Remember, it's that grind. The grind is the giveaway. The separation is the giveaway. All right, guys? Now, hopefully by now you can see why I love ranges so much because these produce some really big moves, a lot more than that first scenario we talked about earlier. They're both fantastic trade setups, and that's the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in my trade room. Every morning, 8 o'clock Eastern time, we get together and we trade together every morning. S&P, NASDAQ every morning in our trade room. Guys, I'm going to put all the important links you'll need to learn the strategy, time better entries, make a lot more money, a lot more confidence in your trading. Again, start first with that free video class. Enjoy all the trade examples in the short video course. Then come join us. Come trade with us every morning in the morning trade room, and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? Make some money for us tomorrow, and you better be here next time. Adios, amigos. Bye for now.